And here we have another example. What you see here is price going above this level and closing back below it. This right here is a fake out, and with every fake out is an M pattern. Also, this fake out is in the form of an M pattern. So those are three confirmations. One, two, three, four candles. These four candles form a three candle pattern. These ones right here as well form a three candle pattern. So now we have five confirmations. All of this happening at this quarter level. The price goes above it and closes below it. Now we have six confirmations. Now I'm waiting for price to close below the 20 MA for entries right here, as you can see with this vertical red line. Now I cannot sell into this 5-minute order block unless there's a consolidation above it and a breakout candle engulfing that consolidation. But I don't have that, so I won't take this sell. But definitely sales have been confirmed. I'm just looking for a re-entry. Price then goes below the 5-minute order block, which also confirms a bearish bias. Price goes back up, does a retest in the form of an M pattern at this support level right here. So here are the entries. I entered here because the risk to reward is still in my favor. As time goes on, price does offer another sell entry right here. So with this entry right here, I'm looking at the fact that price has formed a head and shoulders at the high of the day. Right now, we have this point here and this point here on the 15-minute time frame as our break of structure points. So when price is within these points, I use the high of the day or the low of the day as reference to entering the trade. Price eventually reaches both take profit areas. Now, these are the notes that I've written. Feel free to pause the video to go through them as I point out the things that I was looking at. Another thing is this consolidation above support. Usually when there's consolidation above support or consolidation below resistance, price is most likely to continue going down in this case, or when it's a consolidation below resistance, price is most likely to go back up. But you need to look at other things as well to support a, a trade in that direction. This box right here, this purple box, is a no trade zone. Even when price has confirmed entries into a trade, if it's within this area, I won't enter a trade. Mainly because it becomes a 50-50 scenario where price might just work against me. So I wait for price to clear this area for me to enter trades. Right here is where you'd enter your sell entries when price closes below this consolidation area. I should have put this vertical red line on this candle right here instead of this one right here, because this one is not closing below this point right here. Here's another example where we have a peak formation high in the form of the head and shoulders, and this is price consolidating right here. Here's the purple box I was talking about earlier on. Price has confirmed sells, but I won't take the sells here, mainly because it's a no trade zone. This no trade zone is an hour long. It is the middle hour between the gap time, that is London session right here, New York session right here. I have a 3-hour trading window, and between the 2-hour and between the two trading sessions is 3 hours. Within that 3 hours is the middle hour, which is the no trade zone. So I'm waiting for price to clear this zone, and as you can see, it came back right here. It's still at a point where my risk to reward is still in my favor. Also, this right here is a break and retest in the form of an M pattern. So since sales have been confirmed, I just need to see a 3 candle pattern or an M pattern for me to enter the trades again. This is the M pattern I was talking about at the retest right here. Price then continues to go down, comes back up and gives another entry in the form of a three candle pattern at this point right here. This is a break or structure point on the 15-minute time frame. So what I was looking at to enter these right here is that price did a sweep, and with every sweep is an M pattern. Goes back down, comes back up, a sweep, M pattern. So four confirmations. And also this price action is happening within this 15-minute order block area between this point and this one. So those are five confirmations. My sixth confirmation is that this candle closes below this order block area right here. And then we have price also closing below the 20 EMA. So that is enough for me to enter sells. Moving forward, price did reach both take profit areas. And if you can look, we see this peak formation high, consolidation, and price then going down. Here's another example again, peak formation high, consolidation, entries right here. Price then continues to go down. I clear off some positions, leave it at break even, and then price eventually reaches take profit. Same way I've been analyzing the previous trades, we have a fake out at this point. Fake out gives us an M pattern, and this fake out is in the form of a triple top if you look at the line chart. So we have three confirmations so far, and then we have an engulfment of this high bull candle. That's four. We have one, two pin hammers. That's five. And then this is also a three candle pattern. So that's six. And then we have price closing below the twin EMA. So like I said, sales are confirmed, but I'll be selling into an order block. So I have to wait for price to clear this area. And it does so and offers an entry in the form of a breaking retest right here, which is in the form of an M pattern. Price goes back up again, forms another top, and that's a sell entry as well. This purple dotted line here shows a break out of this consolidation by this candle right here, which further confirms sells. So sells could be taken here and the stop loss above the consolidation. And you can see there's this order block area right here. When we see this consolidation and a breakout above an order block, price is most likely to reach the bottom area of the order block, and it does that eventually. Entries here were taken because of this three candle pattern at this break of structure point. Since sales has been confirmed, I'm only looking for three candle pattern at significant points. Here's a fifth example. This is all the way from 2023. Peak formation high. This is the high of the day, week, month, and year. Consolidation. Breakout of consolidation. A retest in the form of an M pattern right here. And then price continues to go all the way down. This is the 15-minute time frame. Most of my trades these days are taken off of the 5-minute time frame. But you can also see that the 15-minute time frame can offer opportunities to enter such a trade. Now I'm going to show you consolidation after or above peak formation low. Here's the first example right here. We have this peak formation low, consolidation, breakout candle, closing above the consolidation, and then price moving all the way up. Now I'm about to show you a closer look of what's happening here. Please take note of this quarter level right here. This is where price is actually doing all of this movement. So what we see here is a fake out, and with every fake out is a W pattern, and this fake out is in the form of a W pattern. So we have three confirmations so far happening at the quarter level, and then we have a three candle pattern in the form of four candles and then an engulfment of the low bear candle. So we have six confirmations right here. What's left is for price to close above the 20 EMA, and then it does so right here. So now Buys have been confirmed, but I cannot buy into an order block. Once price closes above this consolidation area right here, then I know I can take an entry at this point, stop loss below the consolidation, and aiming for at least a 1-to-1 risk to reward, which is going to be slightly above the 5-minute order block. Now, this is the low of the day, low of the week, low of the month. Whenever we have a low of the week entry, price is most likely to reach the high of the day. So with this trade right here, you can actually look for a 1 to 2 risk to reward for price to reach right here, mainly because this is the low of the week. Low of the week usually reaches the high of that day. And as you can see, price did go all the way up here and beyond. Here's another example as well on the 15-minute time frame. This is a peak formation low in the form of a head and shoulders pattern. Price does a consolidation and then goes back up. Now this is a 15-minute time frame. So on the 5-minute, definitely there are going to be better entries where you have less risk and more reward. But looking at the 15-minute right now, what we have is this fake out. And with every fake out is a W pattern. And this fake out is in the form of a W pattern at the 50s level. So right now we have 4 confirmations and then price tapped this order block right here. Whenever there is an area such as this one right here above an order block, I only need 5 confirmations. Any other situation, 6 confirmations. So your entry would be right here. And then price then continues to go back up. Here's another example right here. We have this level above an order block. So I only need 5 confirmations. So we have a fake out. With every fake out is a W pattern. And then this is a 3 candle pattern. So those are 3 confirmations. Taps into the order block, 4 confirmations. Price goes back up, down right here, and then back up again. So because we have at least 2 candles going up between these 2 legs, I'm just going to read the confirmations off of one leg and add them off of this one. If it's less than 2 candles, I just read it as a fake out in the form of a W pattern. And with every fake out is a W pattern. So those would be 3 confirmations. In this scenario, we're going to get 4 confirmations. So already right here, we have 4. Price goes back down here, closes back up. This fake out is created with 2 candles, so it's a valid fake out. So with every fake out is a W pattern, taps into the order block right here. So we have more than enough to enter buys. This is a time before I started using the 20 EMA, but as you can see, price did confirm buys in this area. It's just that the 20 EMA has helped me filter out trades that are 50-50 from those ones that are most likely to work out in my favor. And as you can see, price then continues to go up to the take profit level and slightly beyond. Here's another example as well. Peak formation low, consolidation, and then a move back up. Here's another example as well, but taken from 2015. I would advise that backtesting price data from years before can help shorten your learning curve, because I would usually go through a week's worth of trading sessions in an hour as compared to taking a week going day by day by day, either using a demo account. So right here we have a peak formation low, consolidation, and then price goes back up. As you can see from the breakout right here, price then continues to go back up, providing at least a 1-to-1 risk to reward. Here's the 15-minute time frame, peak formation low, consolidation, breakout retest, and then a continuation going up. In conclusion, remember consolidation after peak formation high or low, taken within the trading window. Another piece of information that I'd like to offer is that always keep a detailed journal where you can analyze which trades work best for you and which trades didn't work out so that you stop doing all those things that don't help you to be a profitable trader. Backtesting is very important. Like I said, helps to filter out which setups work from those that don't. Now, this brings me to the end of my video. Take from that what you will, and I'll see you on the next video. Till then, cheers.